Good day, good evening. Welcome to CooTek First Quarter 2020 Unaudited Financial Results Conference Call. All participants will be in listen-only mode. Should you need assistance, please signal a conference specialist by pressing the star, then 0 on your telephone keypad. After today's presentation, there will be an opportunity to ask questions. To ask a question, you may press star, then 1 on your telephone keypad. To withdraw your question, please press star then 2. Please note this event is being recorded. I would now like to turn the conference over to Christian Arnell at Christensen. Please go ahead.
Thank you. Hello everyone, and thank you for joining us today. Our earnings release was distributed earlier today and is available on our IR website at ir.cootek.com and through PR Newswire services. On the call today from CooTek are Mr. Karl, Zhang, Chairman and Chief Technology Officer, and Mr. Jackie Lin, Chief Financial Officer. Mr. Zhang will review business operations and company highlights, followed by Mr. Lin, who will discuss financials and guidance. They will both be available to answer questions during the Q&A session that follows. Before we begin, I'd like to remind you that this conference call contains forward-looking statements within the meaning of Section 21E of the Securities and Exchange Act of 1934, as amended. These forward-looking statements are made under the safe harbor provisions of the U.S. Private Securities Litigation Reform Act of 1995. These forward-looking statements can be identified by terminology such as will, expects, anticipates, future, intends, plans, believes, estimates, confident, and similar statements. CooTek may also make oral forward-looking statements in its reports filed with and furnished with the U.S. SEC. In its annual report to shareholders, in press releases and other written materials and oral statements made by its officers, directors, or employees to third parties. Any statements that are not historical facts, including statements about CooTek's beliefs and expectations, are forward-looking statements that involve risks and uncertainties that could cause actual results to differ materially from those in the forward-looking statements. Such factors and risks include, but are not limited to, the following: CooTek's mission and strategies, future business development, financial conditions, and results of operations, the expected growth of the mobile internet industry and the mobile advertising industry, the expected growth of mobile advertising, expectations regarding the demand for and market acceptance of the company's products and services, competition in the mobile application advertising industry, and relevant government policies and regulations relating to the industry. Further information regarding these and other risks, uncertainties, and factors is included in the company's filings with the U.S. SEC. All information provided on this call is current as of today, and CooTek does not undertake any obligation to update any such information except as required under applicable law. It is now my pleasure to introduce Mr. Zhang. Karl, please go ahead.
Thank you. Thank you everyone for joining our first quarter 2020 earnings call. We are excited to report yet another strong quarter where we outperformed our expectations. Total net revenue for the quarter grew 55% sequentially to be $107 million, exceeding our guidance of $85 million by 26%. Total MAU for our content-rich portfolio apps grew nearly 20% sequentially to be 89%. Thanks to the strong growth of our in-house ad network and other business segments, cash flow turned positive during the quarter. These exciting results demonstrate our ability to derive sophisticated user insights and drive growth in both our user base and top line. Our mission is to empower everyone to enjoy relevant content seamlessly, and we are confident in our ability to sustain healthy and strong growth momentum across all three content categories we are now focused on: online literature, scenario-based content apps, and casual games. Based on our current estimates, we believe growth momentum will remain strong, with revenue from the second quarter of 2020 expected to be around $120 million, representing a year-over-year increase of around 219%. despite the impact of the global coronavirus pandemic. As a demonstration of our confidence in the long-term growth prospects of our business, we also announced a new share repurchase plan. Our focus remains on developing and growing our portfolio of content-rich apps to meet the evolving needs of users. MAU of our content-rich portfolio apps increased to be 89.2 million in March this year, up nearly 20% sequentially from 74.6 million in the December last year. We are happy to see such strong growth in our active user base. Average DAU was 25.2 million in March, up from 24.7 million in December. We have been seeing a drop in DAU from certain apps removed by Google from the Google Play in July last year. Since we are not able to update those apps nor use Google push notification to reach and activate users, the drop of the DAU from those apps is expected and accelerating actually. We expect that it will take another 2 quarters to fully digest the impact this is having on our total DAU, and we are working to aggressively grow new apps to offset this impact. Thanks to the strong growth momentum generated by our new apps and games, we are very optimistic on DAU growth prospects over the long term. Our mission is to empower everyone to enjoy relevant content seamlessly. We believe that the global content app market is still in its early stage of development and presents enormous opportunities. We have focused our content app strategy on 3 categories: online literature, scenario-based content apps, and casual games. Our sophisticated user insight-driven growth platform, together with our in-house ad network, form a solid foundation, and the 3 focused content categories are being built as 3 pillars on top of this foundation. Our platform and apps are working together as a whole to ensure our competitiveness on ROI, user retention, and other key growth metrics. For example, online literature is a strategic content segment we began to invest starting during the middle of last year. By leveraging our sophisticated growth platform, the DAU of our online literature apps grew rapidly from scratch over the past 3 quarters, particularly in China. We also established an online literature content ecosystem to support long-term growth in this content segment. Online literature is an enormous and global opportunity for us, and we are taking advantage of it by incubating our online literature apps in multiple countries and regions. Another example is our casual game business, traditionally part of the entertainment content segment, which we continue to invest in meaningfully since the 4th quarter of last year. By leveraging our growth platform, our casual game business delivered better than expected ROI. Average DAU of our casual game grew to 2.6 million from scratch in the past 2 quarters, and contributed 32% of our total revenue during the quarter. This leaves us more confident in its enormous growth potential, and we will continue to invest more in the entertainment content segment. Our focus for now, however, remains on developing and growing our portfolio of content-rich apps to meet the evolving needs of users. We believe that our deep experience and leading operational capabilities will help us generate more success and penetrate deeper into the 3 content categories going forward. Here, I want to re-emphasize that our priority at this stage is to grow the user base of our content-rich portfolio apps aggressively and further cultivate our content ecosystem. We will continue to adopt this strategy and will make decisions with long-term growth in mind. One of our strategic goals is to strengthen our advertising business by reducing our dependency on external parties. In the 1st quarter of last year, we officially launched the CooTek advertising platform, our in-house ad network. Throughout April 2020, we were generating over 70% of our revenue from our ad network. We will continue to strongly invest in both advertising technology and our ad ecosystem. With that, I will hand the call to our acting CFO, Jackie, to walk you through our financial results for the quarter. Thank you.
Thank you, Karl, and thanks everyone for joining us on the call today. I'm going to walk you through our first quarter financial results. All comparisons are on a year-over-year basis unless otherwise stated. So let's talk about our users first. MAU, monthly active users, for our portfolio products reached 89.2 million in March, which was up 49% from a year ago, mainly because we continue to successfully develop and enlarge our basket of content-rich apps. For example, the MAU of casual games in March was 24.5 million, while it was close to zero from a year ago. Average DAU, daily active users, for our portfolio products in March reached about 25.2 million, up 9% compared with last year. Within this, the average DAU of the casual game in March was 2.6 million. Average DAU of our touchpad smart input product in March were about 136.5 million, down 6% from last year. MAU were 178.8 million, down 7% from last year. Total net revenue were 107 million, up 167% from last year. Mobile advertising revenue were 106 million, up about 170% from a year ago. And with the total net revenue for the first quarter of 2020, online literature and scenario-based content apps contributed about 66%, casual games contributed about 32%, touchpad smart input contributed about 0.2%, and touchpad phonebook contributed about 1%. Now, turning to expenses. GAAP costs and expenses were about 117 million, an increase of 55% sequentially, and up 193% from the same period last year. Non-GAAP costs and expenses were 116 million, an increase of 55% sequentially, and an increase of 200% year-over-year. As a percentage of revenue, non-GAAP costs and expenses accounted for 108%. It's flat with previous quarter. Sales and marketing expenses increased by 274% from the same period last year, and 61% sequentially. The largest component of these expenses is user acquisition costs. Currently, we are focusing on the content-rich portfolio strategy. As such, we are investing to expand the user bases of these portfolio products and cultivate content ecosystem. And thanks to our user insight-driven growth platform, we now have a strong growth momentum with a decent level of ROI and user retention. We are confident that we will be able to maintain fast revenue growth in the coming period and achieve future profitability. R&D expenses increased by 19% sequentially and by 3% year-over-year, primarily due to an increase in cost associated with technology R&D staff and share-based compensation expenses. We ended the quarter with 577 full-time employees, up 7% from last year. R&D employees represent about 61% of the total employees, compared with 63% last year. G&A expenses increased by 20% sequentially and by 41% year-over-year. The sequential increase was mainly due to reversal of bad debt provision during the last quarter of $0.6 million. The year-over-year increase was mainly due to an increase in costs associated with the G&A staff and share-based compensation expenses. Well, nevertheless, G&A expenses as a percentage to total net revenue was 3%. It's a decrease from 4% last quarter, and we are keeping the expenses under control. Our gross margin was 95.7%, up from 91.2% during the same period last year, and an increase from 94.4% last quarter. The increase are mainly due to the greater economy of scale as we better utilize our infrastructure. We had a GAAP net loss of $9.7 million, which represents a net loss margin of 9.1%. Excluding the effect of stock compensation, our adjusted net loss was approximately $8.8 million, representing a non-GAAP net loss margin of 8.2%, sorry. As of March 31st, 2020, we had cash equivalent, and restricted cash of about $70 million, compared with $60 million at the end of the year 2019. We had positive operating cash flow this quarter, despite the turbulence of the macro environment. This was primarily because we grew our in-house ad network, which helped us achieve a quicker turnaround of working capital. Last year, we launched a share repurchase program where we're authorized to purchase up to $6 million of our ADS during the 6-month period starting on November 20th, 2019. Until the end of April, we had used an aggregate of $5.8 million to repurchase 1 million ADS. And we will early terminate this 2019 program on May 18, 2020, and take effect a new share repurchase program on the same day. In the new share repurchase program, we are authorized to repurchase up to $20 million during the 12-month period starting from May 18, 2020. And we expect to fund the repurchases with our existing cash balance. Turning now to our revenue outlook. We expect total revenue in the second quarter of 2020 to be around $120 million, representing an increase of 219% year-over-year and 12% quarter-over-quarter. These estimates reflect our current and preliminary review, which is subject to change. So now, operator, we're now ready to take questions.
We will now begin the question and answer session. To ask a question, you may press star then 1 on your telephone keypad. If you are using a speakerphone, please pick up your handset before pressing the keys. If at any time your question has been addressed and you would like to withdraw your question, please press star then 2. Once again, it is star then 1 to ask a question. At this time, we will pause momentarily to assemble our roster. The first question comes from Ivy Lu of Credit Suisse. Please go ahead.
Hi, thanks for taking my question. So my question is, what is your current growth strategy and content strategy on your online literature reading app?
Thank you. Thank you for your question. So we are very optimistic and passionate about online literature market. So reading is one of the very fundamental content needs, no doubt, and a lot of people enjoy reading books in different categories. So we are actually talking about up to 100 million DAU global market size potentially. So online literature is not a new segment in mobile internet industry, but we believe by taking advantage of new technology and new growth philosophy, there are opportunities to disrupt this market. And the point is, once one existing market is disrupted, usually huge potential of this market will be released, which makes the market size much bigger than ever before. So maybe I'm not in the right position to comment or judge our competitors, but we believe that we have different growth philosophy and point of view on this market. So our proven sophisticated user insight-driven growth platform, together with our in-house ad network, forms a solid foundation of our growth capability. So our platform and apps are working together as a whole to ensure our competitiveness on ROI, with user retention and other key metrics. So the content ecosystem is also a key success factor for online literature market, for sure. But we don't think that is about the size of the ecosystem. So we are establishing an online literature content ecosystem in very cost-effective way with our growth philosophy to support long-term growth in this content segment. So we have already launched our in-house online literature marketplace to directly work with writers and help them submitting novels and making money. And also, as I mentioned, that we see online literature as an enormous global opportunity. So we are incubating our online literature app in multiple countries and regions. We will disclose more detailed information when ready. Thank you.
Was there a follow-up, Ms. Liu?
Oh, no, thank you. The answer is very detailed and helpful. Thank you.
Thank you. The next question comes from the location of Nelson Chung and Alicia Yap of Citigroup. Please go ahead.
Hi, management. Thank you for taking my question and congratulations on the solid quarter. I have two questions for management. My first question is for online gaming. Given 2.6 million DAU and around 32% revenue mix, could you share with the rough breakdown of DAU coming from China and overseas markets? Given the global lockdown continues in second quarter, do you think the DAU and revenue for overseas games will increase more meaningfully, or do you think the increase will still come from domestic gaming users? How much of the strong performance of gaming was driven by stay at home versus your ability to come out with more interesting games? So do we anticipate the users and gaming revenue for second quarter in China to remain strong despite work resumption? My second question is regarding the advertising outlook. With the global slowdown coming out from the COVID-19, how do you anticipate the impact to overall online ad budget as related to CooTek platform? Have you seen more cautious budget allocation so far from global advertisers and domestic advertisers? And do you see any shift of the advertising industry categories within your ad revenue? Thank you very much.
Thank you for your question. Let me answer one by one. So the first question is about the online gaming. So in terms of the game business, we are focusing on casual games at this moment because they are more suitable for our advertising business model. So as of today, we have already released over 10 casual games. And our first wave of successful casual games includes merge games such as Idleland King Tycoon and simulation games such as Farm Hero and puzzle games such as Crazy Painting, in which we run ads. And in Q1, we extended our success to elimination game by Hamster series such as High Hamster. So by leveraging our user insights-driven growth platform, these casual games delivered better than expected ROI and contributed 32% of our total revenue. We do expect that the revenue contribution from casual game will continue to increase in the coming couple quarters. And although we don't disclose detailed breakdown on user distribution, I'm still willing to give some general information about this topic. So because all of our games are initially released in China market, so most of the DAU for our casual games at this moment is mainly in China region. Besides, we have already rolled out a couple games to overseas markets, and we anticipate to seeing strong growth in the second half of this year in overseas markets confidently. Well, actually, I don't think that our games benefit a lot from the quarantine. With our casual game business in its early stage, from Q2, we started to focus on improving game quality, localization, and user retention. So we expect to see improvements in terms of the retention rate and ARPU in Q2, which continue to drive the strong performance of our casual game business. We are very confident on that. Thank you for this question. And another question is actually about the the pandemic. So the pandemic impacted Chinese domestic advertising industry because some of the major advertisers were cutting budget, which caused the ARPU is approximately 10 to 15% lower than our expectations, mainly in February and March. But I think the worst time has passed, and the market is recovering, although not that strong, but still recovering. So we expect that the market will return to its normal status in June for China market. But frankly, this year is not a good year for ad business, even without this pandemic in China. It takes time to digest the increasing ad inventory and the relatively weak demand sentiment. And this is about the China market. And the global advertising industry is pretty much replicating the trend happening in China. So now the worst panic moment has passed in U.S. ad industry based on our observation. The budget is recovering, not that strong, but recovering, and eCPM is recovering as well. And I think with the reopen of U.S. and other countries, the market will return to its normal track. I think going to be early Q3. And in terms of the advertiser industry categories, there was no significant change on our platform. So online game, local services such as the food delivery service and e-commerce are growing fast, which compensated the shrink of other services. Thank you.
Thank you.
The next question comes from Hans Chung of KeyBanc Capital Markets. Please go ahead.
Hi, management. This is Zoe on behalf of Hans, and thank you for taking my question. So my question is regarding the second quarter guidance. Can you share some color on what's the drivers of the second quarter revenue growth, and how do you see the profitability in second quarter? Thank you.
Thank you for your question. So let me answer this question. So by leveraging our sophisticated growth platform, we replicate our success in 3 content categories already. And we believe that our sophisticated growth platform and our advanced growth philosophy is a key success factor to content ad categories today. So it makes us confident on not only Q2, but our long-term growth. In terms of Q2 specifically, all I can say at this moment is that we are executing pretty well. And as I mentioned, that our priority at this stage is to grow the user base of our content portfolio apps aggressively and further cultivate our content ecosystem. Meanwhile, we are also optimizing the profitability. With the strong revenue growth and ROI improvements, we expect a percentage of total revenue of sales marketing expense will decrease about 8% in the second quarter, which drives the profitability much better than Q1, I think. Thank you.
Okay. Was there a follow-up?
No, thank you.
Thank you very much. This concludes our question and answer session. I would like to turn the conference back over to Christian Arnell for any closing remarks.
Thank you. This concludes our call for today. If you have any further questions or comments, please don't hesitate to reach out to the CooTek IR team. Thank you for joining. Have a good day or evening. Goodbye.
Conference has now concluded. Thank you for attending today's presentation. You may now disconnect.